Okay, great. Can you see my screen here, Richa? Not yet. All right. Let's go. So looking into Cori appliances here, we are looking into the second part of this particular question. We started the question yesterday. A little of the part of audit risk is left, so we have finished up until the allowances and the allowances for credit losses. Now we'll start with the payroll fraud. Okay, so we'll look into this and where we had left in the question. So in 2005, basically in June 2005, what had happened was a fraud was uncovered. Okay, in the finance department. Yeah, what do you mean by fraud here, Sharon? Intentionally doing. Very good. Intentionally doing something wrong. Very good. Which will affect the. Intentionally doing something that will affect the company. Okay. Very good. Looking into here, so a fraud was uncovered. So this is a risk. Okay. And a payable supervisor had diverted funds from the company's bank account to a supplier account set up in the system. He was immediately dismissed, and the value of the fraud will be recognized as an expense in the P&L. So the employee was immediately dismissed, and the value of the fraud will be recognized as an expense in the statement of profit and loss. Okay, so the employee was immediately dismissed, and the value of the fraud will be recognized as an expense in the statement of profit and loss. Okay. So this is what happened, that there was a fraud and he was immediately dismissed. So now there's a, first of all, this is a risk. Now then I will understand why it is a risk, right? He was dismissed due to fraud is a risk. Okay, because if there were any additional frauds committed and which are not discovered, this would result, because there could be additional frauds which would have taken place, but now still not, they have not been found. Still now they have not been found. Okay, there might be additional fraud also which has not been found till now. As a result of this, your expenses and your payables will be incorrectly stated. Okay, expenses being understated and payables will be overstated. Yet your control risk has also gone up. What has happened is your control risk has also gone up. What another risk has gone up? Control risk has also gone up. Okay. So what is the solution over here? What is the solution? First of all, what you should do, discuss with the finance director, get an understanding what really went down there, details of the fraud perpetrated by the ledger, then what procedures should have adopted to identify any further adjustments that are needed. Right. So discuss with the finance director firstly. Right. So in everything around the fraud, discuss with the finance director. Right. First, what you have to do is discuss with the finance director. Okay. Discuss with the details of the fraud plus controls that are there in place now. Now, what are the controls in place? Okay, now what are the controls in place? Now, because okay, all this has happened, but to prevent it in future, currently what are the controls in place? Okay. Next, do extra substantive testing on payables balance, especially for fictitious supplier. So you'll have to do some extra substantive testing, right, for the payables balance, particularly for fictitious suppliers. He had set up a fictitious supplier and he was paying him salary, right? He was paying him a certain amount of money that was coming to his account only. So for all suppliers, you should do extra set of testing. For all payables, you should do extra set of testing, and also maintain professional skepticism during the audit. Be a very alert during the audit. Be very alert during the audit. Be very alert. So first of all, you discuss with the finance director the details of the fraud plus any control that are in place now. Second, do extra substantive testing on the payable balance, especially for fictitious suppliers, and maintain professional skepticism for the fraud. What you should do is maintain professional skepticism for the fraud. Maintain professional throughout the audit. Maintain professional skepticism. Firstly, discuss with the finance director what really went down and now what controls you have. Fraud happened. Now what controls do you have in place that in future it should not happen. Okay. Second, you look into do any extra substantive testing on payables balance, especially for suppliers. Maintain professional skepticism throughout the audit. Throughout the audit, maintain a very good professional skepticism. Okay, maintain a strong professional skepticism. Throughout the audit, maintain a strong professional skepticism. Very important. Throughout the audit, maintain a professional skepticism. Be more alert. Okay, that is about this. All right, let's go through this one quickly here. What are the solutions here that we've understood, Richa? Okay. Okay. Yeah. What? Just tell me the auditor's response for this fraud. Very good. Hmm. Okay, that's the first one. Next. Yeah, we have to ask them what additional control they have put. Fraud has happened. It should not happen in the future. So what did you do about the fraud? Did you put some new controls or not? Okay, so we'll ask them what additional controls have you put in place to prevent any similar frauds in the future? Okay, we clear with this, Richa? Yeah, okay, next, third. Payable balances, especially for fictitious suppliers. Very good. Yes. And lastly? And, we should use professional skepticism and alert. We have to be alert. During the audit, we should be alert because we can find something. Because we can find some mistakes here for sure. Okay, very good. That is about this. Moving on, next we'll look into since the dismissal, purchase invoices have not been recorded. Okay, so no one is recording the purchase invoices. And if you don't record the invoice, you will not even go and collect the payables. That's another problem here. Receivable days will go up. The dismissal of the supervisor, the purchase invoices have not been recorded in the individual supplier account. It's unlikely that this backlog will be cleared by the year end. So no one has recorded the purchase invoice. You removed him, you didn't hire anybody else. You removed him, you didn't hire anybody else. Now what? Okay, we removed him, we didn't hire anybody else. So what is the risk? That purchase invoices have not been recorded. This is the risk. Now why it is a risk? There's a risk that the purchases and payables balance will be understated if these invoices have not been recorded correctly. Right? Before the system closes in the year end, if you have not recorded correctly, then it will be incorrect. Right? The balances will be incorrect. If you have not recorded this in the system before the year end, they might be incorrect. Right? If you have not recorded, if these invoices are not recorded or accrued in the system, what is the impact? Right? That there will be a purchases. The impact that you can observe over here is that your purchases and payables balance will be understated. Right? What can happen is your payables and purchases and payables balance will be understated. Okay, your purchase and payables balance will be understated. Okay, so the payables and purchase will be understated. Okay, that's the problem. And if these invoices are not recorded or accrued before the year end, before the system is closed, what will happen? Your payables will be wrong, purchases will be wrong. So that is the risk. So what you should do as a solution, and what as the auditor should do? So first of all, you have to review the unprocessed invoices at the year end to check any pre-year end goods. So first of all, you have to all the unprocessed invoices you check them first. All that is unprocessed, all the unprocessed review all the unprocessed invoices at the year end. So at the year end, what you will do, you will look into all the unprocessed invoices to check for pre-year end goods to ensure all of them belong to the pre-year end goods only, right? None of them are for goods that is after the year end, right? Everything relates to pre-year end goods. Before the year end only, whatever goods went, invoices should be related to that only. First thing. Second, ensure cutoff. In the financial statement, the correct period, everything is recorded, right? Ensure they have been accrued in the correct year end, right? So you are ensuring cutoff. Second thing that you're doing is you're looking for the cutoff. That correct period you're recording everything. They're accrued in the year end and recognized as a liability in the same year, right? You're ensuring that the correct period is there. Next, discuss with the finance director how will you resolve this issue. You ask them, okay, you didn't hire anybody, he went off. Now, how will you solve this? Right? What will be your approach to resolve this problem? You have to solve it, right? Sooner or later, you have to solve it. You have to do something about it. How will you do it? Who will do it? Right? What are your approach? What are your steps? How will you go about it? Discuss with the finance director. Okay? Discuss with the finance director. What you should do is you should ensure that you discuss this with the finance director. That exactly what are your steps now? Okay, what are your steps now? Yeah, let's look through this one, Geet here. How have you understood this? What do you do? As an auditor, what are your response to this issue? Hmm. To ensure all the invoices are for goods that were there before the year end only. Okay, none of the goods should be there after the year end. Okay, done. Next.
This director, how to resolve the issue of the unprocessed purchase invoices.
All right. And finally, okay, yeah, you told us that we are ensuring that we are talking to them that are what, how are you going to solve? What are you going to do? How are you going to improve? But what exactly can you do? Okay, perfect. Next, we'll look into in the last two paragraphs here, what are some risks we can find here? During the company, they purchased and installed a new machine. Very good. A new dispatch system. The cost was zero point 0.9 and PPE, very good. They capitalize all of these costs were capitalized. You see, training cost should not be capitalized. This is the risk. Your training cost should not be capitalized. That is an incorrect treatment. That is an incorrect treatment. Training cost should not be capitalized. Right? The training cost should not be capitalized. That is the problem. Training cost should be expensed in P&L. They have capitalized here. Training cost should not be capitalized. Training cost should be expensed in P&L. That is the mistake. What is the mistake? That they have capitalized. Rather, what they should do, they should expense it. Okay. So yeah, what is the risk is that IS 16 does not allow training cost to be capitalized as part of the asset, right? And it only includes direct costs. What is direct cost? Any cost to bring the asset into working condition, working location. Okay. So what you should do? Charge it to P&L. Therefore, property, plant, and equipment profits are overstated, right? Therefore, your PPE will be overstated. So what you have to do? You have to discuss with the director. Tell them to remove it. But ask them the rationale why they have done it, and tell them it's not allowed. Please remove it, right? Discuss the correct accounting treatment with the directors, right? Discuss with the directors. See what is the correct accounting treatment. Okay, what you should do is discuss the accounting treatment with the finance director. First of all, discuss the treatment. See, you should not have done like that. Ask him to write it off. Request to write it off all in PNL to ensure current. Okay, after they have adjusted, you review the journal entry also. If you first you discuss with them, then you tell them to correct it, and after the correction is done, first you talk to them, then you tell them to correct it, and after the correction is done, you check their correction. After correction is done, you check their correction. Okay. After the correction is done, you personally go and check their correction. Okay. You go and check their correction. That is about the training cost capitalized. You go personally and you should check their correction. What is their correction looking like? You personally check their correction. How have they corrected everything? Okay. Next, due to the cost incurred in purchasing the system and increase in receivables, the company's overdraft facility has increased significantly and they have gone over the limit also, right? They have gone over the limit. The bank has expressed concern and a decision will be made sooner or later. Okay. So now they have spent so much money that they are on overdraft now. The company breached the terms of this overdraft facility in June, and the bank will only confirm the decision whether or not to support this business in November. And the audit report will be signed. The company is dependent on the overdraft facility. Yeah, okay. So currently, guys, the risk is that the overdraft facility may not be renewed. Right, their overall facility may not be renewed, and these guys are dependent on this. If the bank refuses to support the company, there may be doubts that they will not be a going concern also. And when you have a doubt regarding your going concern, you have to disclose it. So there's a risk that this issue has not been, this uncertainty of going concern has not been included in the financial statement. There's a risk that this uncertainty has not been included in the financial statement. There's a risk that this uncertainty has not been included in the financial statement. Right? What is the risk? The risk is that this uncertainty has not been included in the financial statement. So as an auditor, what should be your response? As an auditor, your response should be that firstly, you will discuss with the finance director that can they get money in any way else if the bank does not give them money, right? If the bank is unwilling to continue to support the company, can they get the money from somewhere else, right? If the bank is not ready to give the money, okay, if the bank is not ready to give the money, okay, if the bank is not ready to give the money, okay, if the bank is not ready to give the money, discuss with the finance director the availability of alternative financing. Okay, if the bank is unwilling to give the money, okay, if the bank is unwilling to continue to support the company, okay, the bank is unwilling to continue to support the company, the bank is very unwilling. Okay, discuss with the financial director the availability of the alternative financing. If the bank is unwilling to continue to support the company, okay, also what you should do, review the adequacy of any going concern. Also, what you should do is, yeah, also what you should do is review the adequacy of any going concern disclosures. Review the adequacy of any going concern disclosures in the financial statements. Right? Review the adequacy of any going concern disclosures in the financial statements. Okay. What you should also do is review the adequacy of any going concern disclosures in the financial statements. Right? So first of all, you discuss with the financial director, can they get money somewhere else? if the bank is unwilling to support. Next, review the adequacy of any going concern disclosure in the financial statement. Have the disclosure been made? And finally, the audit team should undertake detailed going concern testing. In particularly, review the impact of a non-renewal. The audit team should do what? They should do detailed going concern testing, because see, if the bank doesn't give money, these guys can't continue business. And if they can't continue business, that means they have an uncertainty relating to going concern. And if they have an uncertainty relating to them being a going concern, they have to disclose this. And if they don't disclose this, that is a problem. Right. So first of all, you review the adequacy of any of the going concern disclosures. You review the adequacy, okay, of the going concern disclosures. First of all, you review the adequacy, and you should do detailed going concern testing. What you should do? You should do detailed going concern testing. What you should do? You should do a detailed going concern testing. Okay, the audit team should undertake detailed going concern testing. In particular, reviewing the impact of a non-renewal of the overdraft facility. Reviewing the impact of a non-renewal of the overdraft facility. Okay, what should the audit team do? They should undertake detailed going concern testing. In particular, reviewing the impact of a non-renewal of the overdraft facility. Right? So they should see, is this company going to be a going concern or not going to be a going concern? They have to see if this company is going to be a going concern or not going to be a going concern. Right? So their going concern is going to be a big problem if the bank doesn't renew their facility, they don't have the money. Right? If the bank doesn't renew their overdraft facility, these guys don't have a money. Okay. So if the bank does not renew, if the bank refuses, there may be doubts of regards to the going concern. So the uncertainties may not adequately be disclosed in the financial statements. So what you should do is discuss with the management. What you should do is discuss with the management. Okay. What you should do is discuss with the management. Discuss with the management the availability of alternative finance. If the bank is unwilling to support the company, discuss with the management that can they figure out something, can they get money from somewhere else. If not, you start reviewing the adequacy of going concern disclosures. Has it been made? And second, you do detailed going concern testing. What do you think? Will the company survive or not? Will the company survive or not the next 12 months? That's it. Okay. So what is this? Renewable or renewal of overdraft facility. Overdraft facility renewal. Renewal of an overdraft facility. Okay. Renewal of an overdraft facility. So that is about this. Okay. Moving into the last part here. Define the term professional skepticism and explain two examples from the audit of Korea appliances where the auditor should maintain professional skepticism. Okay. So first of all, you have to tell is what is professional skepticism. Okay. First of all, you should tell what is professional skepticism. Next, you will have to tell that from the audit of Korea, what were certain areas where the auditor should be very professional, should keep professional skepticism. What are some of the areas where the auditor needs to keep professional skepticism. Okay. So what is professional skepticism? First of all, it's having a questioning mind. Having a questioning mind. In your mind, you're constantly questioning everything. Then you are alert to the flawed, and plus you're critically assessing the evidence. Right? You are keeping a questioning mind. You are always alert to the risk of a fraud, and you're critically assessing the evidence. And you are critically assessing the evidence. Okay, so and you're critically assessing the evidence. So in professional skepticism, what happens is that defined in ISA 40 of the overall conduct of an audit includes what you should have. First of all, have a questioning mind. Second, you should be alert, right, to fraud and a critical assessment. And you have to assess the audit evidence. Constantly, you have to assess the audit evidence. So first, you have a questioning mind. Second, you're being alert. Third, you're doing a critical assessment of audit evidence. Third, you're doing a critical assessment of audit evidence. First, you're having a questioning mind. Second, you're being alert. Third, you're having a critical assessment of audit evidence. Third, you're doing a critical assessment of audit evidence. That is about this. Okay. So having a questioning mind, you're being alert and being critical about the audit evidence. That is about this. Okay. So that is about what is professional skepticism. Yeah. Let's make sense of this one here. Richa, what do you understand by professional skepticism as an auditor? How can you have professional skepticism?
Questioning.
Yeah, questioning mind, being alert, and also a critical assessment of audit evidence. Critically